In 2018, European officials, displeased with the United States' use of financial power to influence global politics, devised the instrument in support of trade exchanges, INSTEX, as a barter system to facilitate trade with Iran outside the dollar's realm. However, after a promising start in 2020, INSTEX faltered and ceased operations in 2023 due to fears of U.S. repercussions. This episode highlighted the dollar's unchallenged dominance despite growing incentives to diversify away from it. The global desire for alternatives to the dollar stems from several factors. The unpredictability of U.S. economic policies, exemplified by dramatic shifts like the Iran nuclear deal, creates uncertainty about the dollar's future value. Political standoffs over the national debt cap risk defaulting on Treasury bonds, undermining their status as safe assets. Additionally, the Federal Reserve's tolerance of inflation has raised concerns, yet no alternative currency has emerged as a viable contender to the dollar's status. Despite these motivations to reduce reliance on the dollar, it remains overwhelmingly dominant. Approximately 85% to 90% of currency trades involve the dollar, a figure that has persisted since the early 2000s. This dominance extends to central bank reserves, where the dollar comprises 58% of reserves compared to the euro's 20% as of 2023. Other currencies like the yuan and Australian and Canadian dollars have made minor gains but haven't significantly challenged the dollar's supremacy. Efforts to promote alternatives like cryptocurrencies and digital currencies face challenges. Cryptocurrencies like Bitcoin are volatile, hindering their adoption as stable units of account. Digital stablecoins pegged to traditional currencies offer more stability, but those linked to the dollar have seen wider acceptance. Central banks exploring digital currencies, such as China's digital yuan, have yet to achieve substantial transaction volumes compared to dollar-based systems. Potential threats to the dollar include the growth of alternative payment systems and geopolitical shifts that could favor other currencies. China's cross-border interbank payment system could elevate the yuan's role, although concerns about capital controls persist. However, these changes are expected to unfold gradually, akin to the pound sterling's decline before the dollar's ascendancy. In conclusion, while efforts to erode the dollar's dominance persist, challenges in finding a viable alternative and the dollar's entrenched position in global finance suggest that significant shifts away from it are unlikely in the near term. The dollar's enduring appeal as a safe and liquid asset, coupled with the lack of a compelling alternative, reinforces its preeminence despite ongoing global dynamics.